It is now time for our very first panel discussion of the day. And for this, we're guided under the theme of expanding payment services and products for underserved market segments. To expertly engage in this conversation, please welcome our moderator for this discussion, the CEO of the Payments Association South Africa, Geeta Erling. She is joined by Tim Masela, the head of National Payment System Department at the South African Reserve Bank, and Kersha Singh, the head of department for the Financial Sector Conduct Authority.
Good morning, everyone. I sense that there are going to be lots of questions in the audience, so I'm going to try not to keep the panel fully occupied to allow for some of those opportunities. But nonetheless, this is a very important discussion from our point of view. Yesterday in the economic introduction, we talked a lot about the dual speed economy, and there were lots of questions directed at our economists around what can we as payment systems people do in order to improve both the pretty dire situation that was painted in the morning and also to actually mitigate the effects of the dual economy that we sit in. And that's what this panel today talks to. So I'm going to start off by asking the most fundamental question, which says, we know that 80% or more of South Africans have bank accounts today. Why are we even talking about financial inclusion? And Kersha, I'm going to start with you and then come to Tim, and we'll alternate as we go.
Thanks so much, Geeta, and good morning to everybody today. It's a fantastic question. When you look at the numbers from an access perspective, financial inclusion in South Africa looks great. Actually, the most recent FinScope survey says we're sitting at something like only 2% of our population being financially excluded. But when you dig a little bit deeper, that hides a lot more nuance. So a lot of customers have only a bank account or a funeral policy as their formal financial product. And when it comes to bank accounts, a significant portion of customers use that account for one transaction, and that's to withdraw all the money and continue to transact in cash. So if you examine those figures a little bit more from an actual usage perspective, that's where you can see that there's a lot more that still has to happen so that these financial products and services, and from a payments perspective as well, you can have a bank account. If you're still transacting in cash, you're not really getting value from that account, and it's not playing a meaningful difference in the life of a financial customer. So the numbers look good. I think it's commendable that our inclusion numbers are that high, but there certainly is still a lot to do when it comes to improving usage and the quality of those products and services.
And I'd like to challenge this how important is it conversation, because if we just run through some basic statistics about the South African economy, so unemployment above 30%, depending how you're counting, youth unemployment above 60%, and probably between a quarter and a half of South Africans living below the poverty line, and even increasingly something like 20% of South Africans food insecure. Does this conversation really matter? How important is this in the context of the economic context and socio-political context that we find ourselves? And Tim, I'm going to let you take a first stab at that one.
Yes, I think I'll touch on what Kersha just said, because I mean it resonates with the opening speech by the Deputy Governor to say that people will consume payment services if they feel it's safe, it's convenient, and the reach in terms of acquiring infrastructure is enabling that. So we have to really go into that conversation and crack our heads to ensure that we address those frictions in order for the people, at least like Kersha is saying, to stop using bank accounts as a post box. The money is deposited, they withdraw, and then they transact in cash. So there's fundamental interventions that we may take to ensure that we bring that convenience for them to consume digital services. As the SARB will be reaching out to the market, we have developed what we call the digitization roadmap. You know the strategies, the vision 2025 with its strategic objectives and the goals. Now we're saying, what is the roadmap to digitize from cash? So that's the journey that we have to undertake. Now, Gita, coming to the dire picture that you're painting about unemployment and poverty levels, here then we even reflect deeper into the broader inclusion beyond payments, that is consumption of savings and insurance and other products. And in that space, we believe that when we internalize, I mean, the economic situation should improve. We should do everything from the payment system perspective, as you heard yesterday. We should internalize what we can do to support other aspects of the economy for it to move in the positive direction. And in terms of the inclusion question then, with the dire situation that we have, I mean, working with the providers of services, we should internalize the products and services that are ideal, that would encourage people to be included. And of course, from the payment perspective, as we indicate, we would like people to move more. We're not going to get rid of cash, but move more from the cash society to a cash-light one, where people are enabled to consume digital services. And in that journey, we should internalize what the impact would be that we would contribute towards improving the situation broadly in terms of the broader economic challenges that we face.
And I think before we start going into what is it that we would want to do from the intervention point of view, and there are a few questions coming through in that respect already. Kersia, you've done quite a lot of work around why people are engaging with financial systems the way they are.
Yeah.
Would you like to perhaps talk about a bit of the why we find ourselves where we are?
Absolutely. So the Financial Sector Conduct Authority recently undertook our first customer sentiment and behavior study. And it was a fascinating look at how consumers interact with the financial services sector and how they feel along that journey. A lot of interesting findings coming up that people actually feel quite anxious and overwhelmed when it comes to interacting with financial services. And when it comes specifically to payments, there are two key findings that I wanted to highlight. We asked customers what their levels of trust were towards different types of financial service providers. Mobile money providers and money transfer providers, over 40% of customers said, I don't trust them at all. And we also asked, it was quite interesting, we asked customers to respond via an emoji. So if we have to ask you, which emoji do you most closely associate with these types of financial institutions? Those providers got the confused emoji more than any other. So clearly, you know, while these offerings are valuable to consumers, they're also quite confusing to them. Using them, how much you're having to pay for them, understanding what it is that you're paying for, resulting in quite a lot of confusion. And I think that contributes to how comfortable customers feel with engaging with these types of products and making use of them to make a meaningful difference in their lives. It was a really fascinating study. I'm sure I'll be able to share more of the results with you throughout our conversation today.
Thank you. Yeah, it sounds like it, and I like the idea of the emoji as a response.
Yeah.
Covers all your language barriers. Tim, did you want to add to that?
Yes, in trying to complement what the colleagues from the FSCA have done, we have launched what we call a payment diary. We have identified consumers in the country and requested them to keep a diary over a period of what payment means they are using and why, so that we can get to an understanding that would complement what the FSCA has done, also doing the payment service. In this regard, from our side, our hope was that we want to know why some payment instruments are used more than others and what the reasons are, so that we can, in the engagement with the market, have an understanding and at least internalize what can be done from the supply side. And if we, from the supply side, can solve those problems, then we can start monitoring the demand side and how those products are being consumed. At least we can touch the right points, like Kesia is saying, the consumers don't trust some of the products, but if we drill deeper and find out why, maybe we could do something about that and ensure that we address the concerns that they may be having.
And Tim, I see there are already questions coming through about the digital roadmap. I'm assuming that the output of this payments diary and this research work you're doing will feed into that digital roadmap. Do you want to expand on that a little bit more?
Yes, with our digitization roadmap, we're saying, let's scan the lay of the land and say, where do we find cash payments to be dominated? To be dominant. Which sectors and which parts of the economy do we find that it's cash intensive and why? And our hope is that with that assessment, then we'll work with the stakeholders in that specific area to say, what digitization strategies should we unleash to ensure that we address that? And some of them, underlying in most areas is that consumer education, which can be done with other parties, but I think the starting point is the infrastructure reach, the ubiquity that was spoken about. When people know that if I travel to my village, I'll find digital acquiring infrastructure, I don't have to withdraw the cash before I go there. I'll withdraw probably little cash in the beginning, but as I find that always when I'm there, I can consume digital services, I don't have to worry about that cash. But we need to identify those pockets. And in each pocket, we know which stakeholders can make a difference to work with us from a regulatory perspective to unlock. So it tries to go targeted. We say maybe in government offices, maybe they only take cash in some areas. Yeah. Why? And what can we do? And of course, we know about the informal sector and areas where I think even myself, I think if I happen to take my run and I get dehydrated and I find a lady selling bananas, I can only buy in cash. But I'm wearing my watch to track my exercise. Perhaps at some point I will be able to get that banana and digitally pay for it.
Thank you. Kirsty, you wanted to add?
So one of the things that I just wanted to add a perspective on, and it's something that I think is always kind of top of mind for me when it comes to this conversation of how to encourage a greater shift towards digital. And the example that Tim is giving in an ecosystem, or the project that's going to be run in a specific community in an ecosystem, what would it take? One of the things that always comes to mind for me is the question of interoperability. I've sat in on more than one presentation by a service provider launching a really useful tool, whether it's a fintech, whether it's incumbent, whether it's a telco, aimed at allowing customers to transact digitally. And I asked the question, so if I am a customer and I use this, but the person I want to pay doesn't, am I still able to pay them if they're using something else? And that for me is a big question that could be addressed. Rather than having these pockets of solutions that seem to be, it's quite difficult to get them to scale up because they're not interoperable. Is there a way that we could be, solving that interoperability question as well? Because I think that contributes to the confusion. So I bank with this bank, or I have a mobile payment offering through this telco. I don't understand fully who I can use it with, who will be able to accept it if I want to use it. If the person selling bananas uses that or uses my competitor's one, where does that leave me as a customer? So that's just an additional perspective I wanted to raise, yeah.
And I think, obviously, from where I sit, I would regard that as being a critically important perspective in this conversation. And I think the DG's comments earlier about starting to bring those type of solutions more into the regulatory net and about, I guess we talk about level playing fields, and the broader PIB hopefully gives us the opportunity to start creating that interoperability. Tim,
Yeah.
do you have views on that?
Yeah, indeed. I just wanted to add that the PIB is going to play a very strong role for us to ensure that we entrench this interoperability. Colleagues know that it's one of the key goals of our system to ensure that the systems are interoperable. I mean, we're coming from a situation like Asia said, where there could be very efficient solutions, but they stand alone and they're not interoperable. But we should find a way and ensure that they are enabled to interlink and bring that interoperability. And I think this is the cornerstone of the PIB. We're saying it must ensure that we entrench interoperability in our system. And we, from a regulatory perspective, working with innovators, should pull hands and ensure that the middle mile infrastructure is interoperable. And as DG said, competition on service and products on top of that should happen.
Thank you. Yesterday's morning, after painting a picture of the South African economy, Isaiah left us with a final closing comment when we asked what should payment systems be doing. And it's one I think you'll like, because he said there should be a digital payments mechanism in every spaza shop. Are there other factors that are prohibiting that from happening? And I'm seeing quite a lot of questions that are coming through about pricing. I'm seeing questions about tax avoidance. Do you think there are other factors that we are missing in this conversation?
Yeah, well, I mean, we should find out what would be inhibiting consumption of these services, like the tax issue, or maybe parties that would like to remain in the shadows, and see what is actually possible that we could do to ensure that we encourage the adoption of digital, in a sense that people adopt it because it's to their advantage, rather than, driving it from the avoidance. Yeah, I think when we talk to spaza shops, the question that was raised yesterday, we have that in our digitization roadmap as well, to say perhaps semi-formal or informal settings are more dominated by cash, and why is that the case, and what can be done, and how can we enable the technology to support the consumption of digital services or payments, and how can that be done? I mean, you'll hear every time we're saying the mobile could be a tool that would unlock that, and I believe so. We can leverage that and ensure that we bring that penetration of digital payments in sectors that are otherwise cash dominant at the moment. But aspects of tax avoidance, we need to avoid it approach it in the most pragmatic way, because we believe that that is also going to contribute into the broader goals. I mean, if we ensure that people are consuming digital payments in the most convenient way, and on the other hand, we bring responsible citizenry and all those. I think all those are actually dovetailing together for a better picture that could translate into addressing some of the social ills that we're actually experiencing. So in the broader scheme of things, we would find more positive spin-offs than negative, I would believe.
I'm going to change tack a little bit and ask about what it is that you can do to change the situation. Because we're talking a lot about products, but ultimately neither of you make or deliver or service products. You can only create an environment where others are able to do it. And I'd like to focus a little bit on those for a couple of minutes. So, Kirsty, we've seen recently the FSCA draft position paper on open finance, and specific references, obviously, to payments initiation use cases. Do you believe that a open banking regulatory regime could play a role in solving some of these financial inclusion issues?
I think that definitely has a valuable role to be playing. I think, just these questions that you're asking, even the one that you were posing to Tim about spaza shop acceptance, it's quite a nuanced conversation the payments is kind of facilitates the value chain, and so to look at things that in one perspective, you have to consider upstream and downstream. What are the knock-on implications as well? I think open finance provides a really valuable opportunity for more customized and personalized offerings and solutions. I think, as our paper kind of alludes to, we're one player in this open finance landscape, and our particular perspective in that is making sure that whatever route we travel, that customers remain protected. So I think, as it develops, as it goes in that direction, how can we be making sure that it's happening with customers' informed consent, with their data and funds being properly protected, that they understand what it is that they're consenting to and what that means in terms of the offerings that they get. Just another perspective that I wanted to bring from our study that was undertaken. We ran a discrete choice experiment to try and investigate what would it take for somebody to shift from transacting in cash to using their banking app. And what we found was the biggest predictor of whether somebody would use the app was whether they'd used it before, which sounds kind of counterintuitive, and what does that really mean? But what it means is, once you get people over that hurdle of first-time use, they're much more likely to continue using digital means of transacting. And how do you then incentivize people to get over that first-time use? Another key finding is that people really trust peer recommendations. So people that they've spoken to, their family, their colleagues, for what type of offering to go towards. And so you think, could you have these types of solutions like in the Uber model, where you incentivize somebody who uses Uber to get somebody else in their network to use Uber? Is there a way for digital transactions for apps, et cetera, that you can start getting people who have been using these digital channels to make it more comfortable for other people to start using these digital channels as well? And those are some of the things that I think we can, start seeing. How do we incentivize those types of movements in the industry to really encourage this greater sort of take-up?
Which does ask some of the questions that have started coming through around how do you incentivize the adoption of. But it sounds to me like there's some very important insights in that paper of yours.
Absolutely.
For banks and others who deal directly with consumers in terms of how to get their base to change behaviors.
Absolutely.
And it is available on your website.
It is publicly available. Really great behavioral insights into the consumer's mind along their customer journey.
Thank you. Tim, we touched on the CBDC stuff a little bit earlier. You and I have spoken about this before, because one of the more challenging questions I find is this assertion that CBDC could play a role in financial inclusion. I don't believe that you have particularly found from your initial studies that would be the case.
Yes, our initial study, as colleagues would be aware, the recent one that we concluded was looking at the feasibility and desirability of issuance of a retail CBDC. That work was concluded, and now like to apologize that we did not publish the paper, the outcome of that study, but the bank decided that we should undertake further work on CBDC that is currently facilitated by our FinTech unit. And this is focused on research of how we would approach the issuance of a CBDC SSA, assuming that we would decide to do that. And this work is underway. That research will culminate in an output that would be put out to say, this is how we feel we should approach a retail CBDC. And to what you asking, Gita, indeed, the first thing we ask ourselves when we say issuance of a CBDC in comparison to conventional payment mechanism, what would it give us that the current cannot give us? What advantages would we see in it? And you know that people believe that it would give us that peer-to-peer feeling, and perhaps somewhere it would offer us the programmability of money, so that some transactions are coming with when something happens, automatically that condition is met, then the payment would take place. That vis-a-vis conventional, how would it work? So there's benefits that we believe could be derived, but at the moment, we ceased with work to do research on our approach to such an issuance, and this would be something that would be made public. I mean, you know, some jurisdictions like the Euro area, they put out a paper to say how they approach the digital euro and all, similar to that. And this is work that is ongoing. I can promise you it's approved by our executive that after the feasibility, desirability, that's work that needs to be done. And with that, perhaps we will come to a position where there could be a position to issue an e-rand or something like that. But we are careful because we observed that some of the jurisdictions where they proceeded, there were unintended consequences, or there's things that they discovered afterwards. I mean, colleagues know about on our continent, our colleagues from Nigeria, they were one of the first movers, but they discovered some things that needs to be fixed in order for them to proceed.
Thanks, Tim. I'm going to ask a slightly more political question. So we've seen ongoing and regular interruptions into the payments of social grants. And let's maybe just run through those numbers. So according to recent SARS stats, we're talking about 19 million South Africans, so a third of the population almost, receiving social grants, with a further 11 million receiving the so-called social distress relief 350 Rand grant. How important do you feel the role of a state bank could be in driving financial inclusion? I'll let you take that one.
Thanks.
Yeah. I would believe that in the thinking that we would want to take forward with the payment industry, it dovetails to what the Deputy Governor mentioned in his opening speech, to say that there's some building blocks that we can establish. I mean, he mentioned KYC, digital identity. We believe that, well, we don't want to enter the state bank debate, but perhaps it will be established and it will be a success. But where we question ourselves, we say, in the payment system, and especially to the conversation where the SAP could take more of a stronger role to work with the market to enable the building blocks, we could say, a possibility of engaging on ensuring that we enable wallets, a lightweight account. Could there be something that can be done by us to make it easy for providers of these services to find a platform that they can leverage? So we approach it from that perspective to say, what can we do from our space to lay the groundwork that could enable that? And if we did that, hopefully the state bank, when established, could leverage that. Because in this journey, a typical example we use is this disbursement of social services. And colleagues would be aware that we had to grapple during the COVID time when the government decided that it needs to put out some relief. We had rushed meetings with the stakeholders, banks, to say, what is the best possible offering that we can make available to them? And I felt embarrassed to say we should be having a product that we can just pull. We shouldn't be trying to design it at that time. So this thinking of saying that our platforms should have some pillars that can be leveraged, I would believe maybe to avoid the politics, Gita, I would say we do that and we let the state bank leverage that.
Thanks, Tim. I'm going to start picking up on, because I've picked up a few of the questions, but there are a lot coming through. So I'm going to depart slightly from this and move on to those. I think we've touched on some of them, but I'm going to just read some of the questions as they've come through. So inflation and high interest rates, how do we aim to bring or expand payment services and products to the informal and underserviced markets, bearing the price sensitivity and lack of trust? So I think we've touched on some of those, Tim, through your study.
Yes. Yeah, well, I think here we need to work with the market, and I hear conversations like previously, we would just price for payment transactions. And now there's a call that, let's say, if we want to move some of the transactions from cash, they should almost be free. And now, what is in it for the providers if they're offering them for free? But I think there's ways that could be thought of other benefits that could be derived, that you offer those payments for free or almost for free. There's creative ways that we can come up with to ensure that we encourage. Because I feel people believe that transacting in cash is for free. I just pay for my one withdrawal, I get the cash, from there I transact free. But when I transact digitally, it could be that the cost element comes into the equation, and that could discourage that migration. So, but there's a call that we need to make at least low-value payments as free as possible. Colleagues would have seen in the PaySharp pricing schedule that some of the providers of the services, within certain threshold, the payments are free.
Yeah.
Yeah.
Thank you.
So, I mean, I just wanted to add to what Tim is saying then. I mean, studies have very clearly shown that once people are participating in the financial ecosystem, their breadth and depth of product use deepens as well. So it shouldn't just be seen as, making this one offering free and that's all the customer is going to use. Even in the example that I gave on the shift towards digital, you start with one transaction, but it broadens your scope as you become more comfortable to start accessing other products and services as well. And I mean, to take us back to what the role is of the financial sector in an economy, it really is, allowing people to transact, to manage risk, to save their money. Often payments is your first entry into that world, but it shouldn't be seen as, that's where you start and stop. It's your entry into it, and it often allows customers to then expand into more products and services that are meaningful and useful to them at particular stages in their life. So yeah, just to add to what Tim is saying on that, trying to get that first point of entry as kind of seamless and easy as possible, I think definitely has spin-on benefits down the line as well.
And in fact, one of our panelists in yesterday morning's session, Richard, spoke very compellingly about the benefits of that data and that transactional information to the banks in being able to then offer other services further down the value chain.
I mean, going back to the open finance discussion, absolutely, to banks, to other players in the ecosystem as well, it really does build a wealth of data as well.
This next question is not one I'm entirely sure we can answer, but I think it's a good point, which is how do we address the large undocumented foreign workforce in South Africa and digitize their payments? Without them, will we ever be able to move to a slightly less cash-intensive society? I don't know. It's not your areas of regulation, but Tim, I'm sure you have a view on it.
Yeah, no, it does confront us, Gita, because when we said there's building blocks that we can embed in our system, including digital identification, eKYC, the question that comes after that is, would that only apply to South Africans, or would that be extended to other nationals that are in our shores, and how do you accommodate that? I think it becomes, I mean, it's not in our space. We will ensure that in all this journey, we stay in our lane, like DG said, and work with the parties, with the authority, to see what can be done. I mean, I'll give you this one to say that in our financial inclusion journey, some of the interventions that we wanted to embark upon, we were forced to interact with the Home Affairs, and banks would know that as we're trying to make things easy, banks don't want to find themselves in the wrong side of the law, even if it's another regulatory authority like the Identification Authority of the country, and saying, what can we try and offer and embed into our system in a risk-based approach? But as you know, it's balancing of interests here, because we want the efficiency to happen, but the other authority maybe has got another objective. But we believe that in these conversations, if we said there could be trade-offs that we need to consider, hopefully we could get a balance somewhere. So that it's not only the one side that is reigning and then we end up not achieving. So that question we cannot answer, but it's a question that is real. As we wanting to improve the feel and the consumption of these services, the fact that we have other nationals in our show, and the problem is especially the undocumented one, where where it becomes very much problematic.
I think, just to add as well, absolutely agree on, having to stay in our lane. It gets a little bit tricky when, we also have what's happening now with the ZEP process with government. So people who are here legitimately, but their status is now unknown, or uncertain rather than unknown. I think, the undocumented population is a particularly difficult one to know how to address. But, it's also a question in terms of remittances for people who are here legitimately as well, or who may be here for short periods of time. So that's another very particular concern from a financial inclusion perspective. How do you make that remittance process as affordable and as convenient as possible to, again, reduce the risks that come with transacting and transferring this money in cash?
And I think both of your comments talk to something, and here I'm sure I'm speaking on behalf of large parts of the audience, is around how important this coordinated approach across different policy and regulatory areas is in this conversation. Because even the remittance conversation, the first response from half the people sitting in the audience will make it easier to move money cross-border. Yeah. Although I heard yesterday that you do not have allowances on much lower values from a remittance point of view.
Yeah. Yes, I think you cannot emphasize that more, Gita. I think coordination by regulatory authorities is quite key. I mean, we always called upon by the market. You know the conversation about us saying that we want to integrate as CMA, we want to integrate as SADC, but we don't let go. We treat a transaction within CMA the same as one going to Australia or Japan. And what's the use? Why can't we bring some controls and make it easier in that context? And some of them, I mean, I'm saying it's easier said than done, because maybe let me just say this, because then you get told that but FATF doesn't recognize this little group of yours. They want you to apply those strict rules. So my conversation is that we should think this through and come up with workable mechanisms and make it our problem to convince FATF that the ultimate goal is to ensure that we curb money laundering. And if we can have mechanisms that we can implement that are moving towards addressing that, I feel FATF should listen to us, rather than us saying, but FATF says you can't do it, and then we accept it, and then we're trying to integrate, and then the FATF rules say, no, you can't. We rather just disband that, because it's working against. But I feel that if we come with mechanisms that are addressing the risk that has been identified, and we present that in the most convincing way and forceful way, then maybe we should get some concessions for us to be allowed to have some controls, to take care, but still make things easier.
I think that's going to be music to many ears in the audience as well. So strength to your arms in all of these conversations to both of you. I'm going to pick up on another question that relates to something I want to ask. So Anonymous asks, should banks review or renew their policies to accelerate financial inclusion? The way I would phrase this, and maybe Kirsty, you're the first one to take it, is, are banks doing enough?
So, I mean, I think it goes back to what I was saying at the beginning of the session. We've made really good strides, and let's take nothing away from the fact that over 80% of our population has a bank account. I think there is much more that can be done when it comes to investigating the quality of those products and services that are provided. So to bring it back, for example, to the social grant discussion that we were having earlier, that actually the social grant recipients account for quite a large portion of postbox accounts. So once the grant is deposited, that is what's withdrawn and then used in cash. And I wonder if there aren't better ways that, or better offerings that could be considered that encourage people to transact with a card rather than having to withdraw that cash. I mean, I understand that there will always be some transactions that will be done in cash for the foreseeable future. Your transport journey on a taxi, by and large, is going to happen in cash. But if, some of these cash withdrawals happen at a retailer, at a point of sale at a retailer, where you could just be, buying your groceries at that retailer, swiping your card, and trusting that that is just as good for you as withdrawing that cash and paying in cash. So I think much more could be done, particularly when it comes to alleviating this anxiety and confusion that consumers feel, to make them more comfortable with using these product offerings. I get a little bit concerned by, we understand the shift to digital, we understand the cost benefits to it, but to penalize people for still making use of physical points of transactions, I feel, is not the right way to go to incentivize people to shift towards digital. In the survey, it's still a really high preference from customers to engage with somebody in person, to go into a branch and speak to somebody. And I think rather than just using kind of very punitive penalty measures to say if you go into branch, it's going to cost you this much more than if you did it digitally. How can you make people more comfortable with using those digital channels? Just the last point I wanted to make, a very interesting finding from the survey as well, is that people do want the app, but they see the app as being there in emergency situations. So if it's after hours, if I'm not able to get to a branch, at least I have the app to make this transaction. And how can we shift that from an emergency only to actually, let's make this my day-to-day, and going into the branch is the emergency situation. Really starting to think a lot more innovatively and a lot more from a customer first perspective on how to incentivize these types of channels to be used more.
And what I'm hearing you talk about is not applying negative incentives, but trying to find more positive incentives that move people towards the right roads rather than penalizing more expensive channels, which talks to the importance about cash continuing to be available at reasonable prices and on a broad geographic basis to continue to support financial inclusion.
Absolutely. I think we definitely are moving in the right direction, but we need to be cognizant of the fact that cash is still going to be preferred for a long time, and to try and make that shift happen in a way that doesn't unduly penalize customers for making use of that.
Thank you. I see a question around who is responsible for providing the electronic devices technology that will enable the spaza shops to digitize payments. And I guess the DG touched on that question to some extent in talking about the balance between, so what role does the central bank play in the utility in the center versus the outside? And I'm hearing a few questions, I'm seeing a few questions along those lines that are floating through. I don't know, Tim, if you want to elaborate on that at all.
Yeah, I believe that as the Deputy Governor indicated, we believe that staying in our lane, we still have a greater role that we can play to move with the market participants and make the payment system take its rightful position top up there in terms of ensuring that it offers what the consumers of payment services desire. So in this journey, as we say, our focus is going to be on shared utility type infrastructure that is required to form the pillar on which the providers of services need to come on and innovate and ensure that they offer innovative products and services. And in that journey of shaping and together purposing this middle mile infrastructure, we would need to work with the market participants. And fortunately, we believe the structures that are established in SA Inc. that we're going to be able to leverage and ensure that we achieve exactly that. And the only thing is that we would be maybe being stronger catalysts rather than maybe just issuing something and expecting the market to move. We would still be involved in the market to drive the realization of whatever the vision that we all have agreed that we share.
I'm looking forward to more of that conversation around how you become a stronger catalyst. In the remaining time, Kirsty, I'm going to give the last word to you, and I'm seeing questions from the audience about where they find your study. So maybe we should at least deal with that pragmatic question.
Thanks so much. You can just search for it on the FSCA website. It's the Retail Customer Sentiment and Behavior Study. If you're not able to find it, welcome to get in touch with me as well. I'm happy to pass on a copy.
Thank you. And thank you to both of you. I think we've covered a very broad range of topics that all narrow into this very difficult conversation about how do we get people to adopt more digital forms of payments, and from there, much greater access to financial services and products. So thank you, both of you. And I'm sorry that I haven't been able to get through even a fraction of these questions, but hopefully you'll be around over tea to take a couple of them.
Thanks so much.
Thank you.
Thank you.